Hello everyone. This is the pre-market report video for today, 5th June 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. Last night, US market was crazy volatile as it had both positives and negatives. So first, let's start with negatives. Before their market opening, ADP, a private payroll company, released their report that in May month, whole US country added only 37,000 new jobs, which is way lower than what analysts expected, above 1 lakh new job addition. So this is a very bad economy macro, hence it's the first negative. Just for info, this is a private jobs data. The government official one is due on coming Friday. Then the second negative, during the market closing time, US Congress Budget Office released the report that they are expecting economy to contract from all these Trump tariff kind of, which on the last 1 hour completely erased all the positive run it had earlier. Now coming to the positives, White House gave the confirmation that this week US President and Chinese President is going to have the telephonic conversation, which obviously market consider that as positive since it reduces the US-China trade tension. Then second, very important positive info, because of the very poor private jobs data, the probability for the future rate cut this year increased now, which in turn crashed the US all major treasury yields like 5-year, 10-year and 30-year by around 2.5%. Hence, for most part of the day, US market traded on the positive side. So in the end, Dow Jones alone was down marginally by 0.22%, S&P 500 closed around absolute flat and Nasdaq increased 0.32%. In case of VIX, it didn't change much, it's still around 17.5. Then about oil, as per EIA's latest report, US gasoline stocks increased by 5.2 million barrels, which in turn pushed down the oil price by 1%. So at the time of this video, double-day crude trading near $63 per barrel and Brent crude trading around $65 per barrel. Then regarding Indian ADR, as it is, it closed completely mixed. One IT stock, Wipro ADR closed positive and the other one, Infosys ADR, significantly negative. Similarly, HDFC Bank ADR was positive, whereas ICICI Bank ADR closed negative. So it's completely mixed, no trend. However, on the arbitrage side, clearly IT stocks showing a negative arbitrage of over 1%. On the other hand, banks showing mild positivity. For some reason, lately there is no major correlation between Indian ADR and spot market. I don't know why, but one thing for sure, in the long run, eventually the arbitrage will get matched up. Anyway, for now, this is the status, IT indicating negative and banks indicating positive. About GIFT Nifty, early morning it increased some and traded at 24,747. Equating that with the spot market, it's indicating mild 30 points positive opening. So those were the things happened on the dollar market. Now let's move to India related info. About institutions, in the cash market, after 3 sessions of continuous selling for near 12,000 crore rupees, finally FII turned as net buyers. Yesterday they net bought for 1,080 crore rupees and DIA also net buyers. They net bought for 2,550 crore rupees. Then turning to the derivative market, for the second day in a row, yesterday VIX kept collapsing. Hence call options premium eroded like crazy despite market was moving up. And in the index options, new open interest addition was almost entirely from the put options near 12%. On the other hand, total new call option open interest barely added 1%. Despite that, yesterday proprietary traders bought 6% new call options and bought and sold similar number of put options. Hence, now proprietary traders increased their positive position as they are having net 3.4% volatility weightage open interest on the bullish position. Then in direct opposite, client or retail traders increased their bearishness. They are holding near net 3% volatility weightage open interest on the bearish side. FII stands in options, no change, maintaining their neutrality. Just for info, because today is options weekly expiry, so option stance is more important today than the future index position. However, it's worth to know, hence if required, please pause and have a look. Overall, based on the present open interest data, it seems proprietary traders makes more money if market goes up. On the other hand, retail traders makes more money if market goes down. FII more of the neutral, but because they were equally buyers on both call and put options, it seems they are expecting the breakout on either side. Moving to the stock specific, yesterday Reliance and Airtel both together challenges the Indian government for setting the low fee for the satellite internet. And in the same article, they mentioned that Indian ministry is very close in issuing the license to Starlink kind of. So if it happens, or more comments about the satellite internet rules will potentially influence Reliance, Airtel and Vodafone stocks. As a summary, US market closed flat to mixed but no global momentum deterioration. Similarly, Indian area also flat to mixed. In line with that, GIFT Nifty indicating the 30 points gap up opening. Please note this couple of points. 1. Today's weekly expiry and tomorrow at 10:30 am India's interested decision is due. So we can expect today's and tomorrow's price action will be in response to those events. Then as per stock open interest, Mastock Shipping, Mankind Pharma, Alchem Lab, Hindustan Zinc and HAL are some of the 58 stocks that got an increase in open interest along with a decrease in price indicating the short build-up. On the other hand, Union Bank of India, Fortis, Blue Star, Page Industries, Punjab National Bank and Indian Bank are some of the 93 stocks that got an increase in open interest with an increase in price indicating the long build-up. About the things to look out, early morning Chinese PMI data is due and at 9 am just before our market opening, Japan's 30-year bond auction is scheduled, which is very important since last month this 30-year Japan bond increased to near 3% from 2.4%. If required, please pause and have a look. It's like 20-year high value and sudden fastest jump in the Japanese bond market, which immediately affected the global momentum. Hence, we need to keep an eye on it today. Then followed by during our market time, there is nothing that I'm aware of could influence our market. So then after market hours at 5:45 p.m, Europe's interested decision is due. At present, market is expecting the European Central Bank to reduce 25 basis points. And in the night for US, weekly jobs data, crude oil inventories, trade balance and some FMC member speech are some of the important things we need to keep an eye out today. Coming to technical, Nifty opened 20 points gap up. However, morning it had severe volatility, but then it gained strength and was positive throughout later part of the session. Then closed at 24,620. Thus on the daily chart, Nifty formed a small bullish candle following the long bearish candle from the previous session, which is okay and positive. It could be technical bounce or might be the reversal. We need the confirmation in the today's session. Since on the negative side, still Nifty is below short-term moving averages, 10-day and 20-day exponential moving average. And in addition, both RSI and MACD continuing their negative stance, although MACD line is well above the zero line. Hence, the immediate support is at 24,500. A break below this level could lead to further weakness. On the higher side, resistance is at 24,750/24,900. In case of Bank Nifty, similar to Nifty, it also opened 50 points gap up and dropped in the morning. Later, it turned positive and maintained it throughout the session and closed above 55,600. Thus, on the daily chart, Bank Nifty formed a doji-like candlestick pattern following the bearish candle of the previous session, indicating indecisiveness among buyers and sellers. RSI hovering around the 60 mark. Hence, the immediate support is at 55,000 to 55,200 level, while the key short-term support is at 54,000 to 53,500. As per the weekly options data, the maximum call option open interest was at 25,500 strike, followed by 25,000 and 24,600, with the maximum new call option rating at 24,600 strike, and then 24,700 and 24,650. On the put side, the maximum open interest was at 24,600 strike, followed by 24,000 and 24,500, with maximum new put option rating at 24,600 strike, and then 24,500 and 24,000. Thus, from options data, Nifty is expected to trade in the range of 24,500 to 25,000 in the short term, with 24,600 as the crucial level for further directional movement. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.